Hello again, YouTube, back with another video 2 days in a row. How exhilarating. I find these charts very soothing. I hope you do as well. Let's get stuck into this one. So again, talking about Bitcoin, in the last video we talked about these market cycles that Bitcoin tends to follow and did some dubious extrapolation on what could potentially happen. In the immediate short term, we might do a little bit of a crash, we might have some consolidation, look for some higher highs, or then we might just skyrocket straight from here. But no one really knows what's going to happen in the short term. No one knows what's going to happen in the long term. But we can, when you start looking at markets in the long run, we can kind of have more confidence on what could potentially happen. And if you're interested in investing or starting to get involved in the space, today we'll look at these potential entry points in the market, if you may, and how you can identify them. But let's look at this general idea that Bitcoin falls within these logarithmic regression bands. There's all sorts of trends that people have put in place with Bitcoin, but it's kind of accepted by many that at any point in time, the price of Bitcoin might be somewhere between these sort of logarithmic regression fits. I'm not saying that this will hold true for the future, but definitely potential in this. Let's play around a little bit, see if we could follow something like this into the future, something like that. Of course, these are logarithmic, these are straight lines, so this wouldn't be exactly what it would look like, but something like this. We go up to like, what is this, 2030? That's a long way from now. But yeah, so in the meanwhile, we might do something like this with the price. Just move, go lower, go higher, kind of just play around here. And this is one idea, one way. Ooh, let's take this away. I'll fit this. Yeah, so one way to look at the markets. And very excitingly, this would tend to show that the price of Bitcoin is monotonically increasing. I'm not saying that it will. We could break away from these logarithmic bands at any point in time, but if this were to hold true in the long run, we could be looking at something like a 500K Bitcoin almost pushing to a million in 2030 in 10 years. But at the same time, in 5 years' time, we might be back to a 30K Bitcoin. You never know with these volatile assets. But interestingly enough, it is a viable candidate for an asset to get involved in. So how would you look at timing your buys into the market? Of course, in the previous video, if you haven't watched it, go watch it. We looked at this potential of buying these market cycle bottoms, and in this first cycle, you would have made a 700x return, second cycle a 500x return. But for us mortals, timing these bottoms of this cycle is extremely difficult. If you can do that, I tip my hat to you, give you a thumbs up. But the rest of us, we need to figure something else out. What is a potential option for us to make sure that we get a good price when we enter the market? So one idea, if you are a normal chap, regular chum, gal, like for example myself, might have some savings, chuck that in, have that into interest account, earning some interest, but you want to look at some other assets. You could look at generally timing yourself into the market gradually. Even better if you're have some sort of reoccurring income in the form of a salary, whatever it is. Take a slither of that and chuck it into an asset like this gradually. And what you notice is that now you don't have to worry about buying at these local tops or missing the local bottom over here. You've dollar cost average, this is called DCAing, your position into the market. So you might have not got all these good buys at about $3,000, but you've not just fully chucked all of your capital in at $10,000. You more or less looked at something like, oh, that's probably a bit low. Can we move this? Yeah, something like a 7K. 7K average buy into the market, which put you in a good position going into, say, this charge we've had going up to 60K, almost 70K. You would have, by just regularly over a span of many years, buying into the market, now on average your investments would yield a 10x return. But can we do even better? I think we potentially can. Let's change this to a daily time frame. All this stuff is, hopefully this doesn't, let's see if we can delete this nonsense over here. Yeah, all right. And let's put this moving average onto the chart. Let's see if we can zoom in. Zoom in? No, not letting me zoom in. Maybe if I put this, yeah. All right, sorry for the inconvenience. We're back. So what a moving average is essentially, I've set it to 7 days right now. It is an average of the prior 7 days at the price of the asset for those 7 days. So essentially, say here on the 2nd of April, 2021, the moving average, 7-day moving average was at 57K and the price was about 58K. So our price was about $1,000 higher than for the past 7 days. But in these downturns, say here on the 19th of April, 2021, the price ranged between 56K and 59K, but the moving average was above 60K. So you would have got a better price compared to the previous 7 days. Now, looking at Bitcoin as a whole, like we know, it has been generally trending upwards. So the price of any current day in retrospect to the moving averages will tend to be higher than the moving average. But this can give us an opportunity to look at how high above this moving average is. So here, what I've done is I've looked at the whole history of Bitcoin and look at the closing price and how high that closing price of that weekday is above the moving average. And as we can see, on Mondays, it's less than a percentage higher. On these other days, Wednesdays, Saturdays, on average, we see over a percentage higher than the moving average. So if we look at the past 14 days, same thing. Mondays seem to be closer to the moving average than other days. 30 days, same thing. So if we were to take this blind approach of DCAing, let's see if we can go back to the weekly time frame. Yeah, so if you're not interested into looking at all these data, trying to time these bottoms, just taking this blind approach, chucking in something at recurring intervals, that's fine. But you can take it a step forward and look at when you have that disposable income that you want to put into these assets. Look at the weekday, look at the calendar, what day we're at today, and potentially at the start of the week, Mondays, or then Sundays as well. They might be the better opportunities. On average, as I said, like today is a Wednesday, we've capitulated very hard. So buying on a Wednesday here would have been probably better than a Monday. But on average, if you just want to stack up on Bitcoin, Mondays might be the best opportunity for you. Let's look at another thing. So say a more traditional investment option, the S&P 500 hasn't seen as high gains as Bitcoin for sure. This is, let's put this all. So definitely made some major moves in the past, let's say, that's 700 to 400, what's that? That's like a 5x in the past 20 years. But definitely a valid valid thought for you if you're interested in the investing space and looking at a possibility to invest. Doing that simple, put a blindfold on every month or whatever, chuck a little bit of your income into that rather than just keeping it in a savings account. And for the S&P 500, if we do the same calculation and look at the average close price, of course these traditional markets only run on the weekdays, so we look at the 5-day moving average. We see that during the start of the week, or maybe during the end of the week, definitely not during the middle of the week, on average would be your best bet on your positions of entering the market. Same day, looking at 2 weeks, start of the week or end of the week, and for a month, definitely Mondays and Fridays tend to yield the best opportunity for you to enter and increase your position in these traditional markets. So just another way of you to look at the markets. Hopefully you enjoyed this video, and if you are to invest responsibly, do your own research and look at cool ways to do it.